Traders, hello everyone and welcome to this Friday webinar. How are you guys doing today? Is everyone having a great time so far? At least I hope so. So let's get started. As usual, our risk warning states that this content is for general information only and is not intended to provide any trading or investment advice or personal recommendations. Also, in terms of fundamental analysis, you can visit on our website the analytics section and weekly podcast, and you can find the relative episode. And for new users and new traders with us, please make sure you download your mobile application. Thank you so much. You see, guys, today was really, really fast. The introduction. We are ready to go to the charts. Larry, good morning. Thanks for joining us today. One second, guys. Maria says, good morning. Good morning, Maria. Mladen said, good morning. Good morning to you, Mladen, as well. So, traders, what do we have here? We have this pound US dollar as usual, and that's the 12-hour time frame. I draw this trend line, as you can see here. Up this up trend line, and price kind of rejecting this trend line. Also, it's intersected with the 21-day moving average. Therefore, there is a double confluence here. Now, if we draw the FIB from here, from 100% to 0% to see the retracement, we're going to be 50%. It's somewhere at this area. So price might want to retrace a little bit more. Here is the 50% and here is 61.8%. Now, the question is, okay, Theo, we have trend lines, we have moving averages. Guys, I'm telling you, I'm in your mind. What should we do? We have FIB. Which one is the best to watch out for? As we don't know where the price will stop for sure, we just do assumptions. An uptrend is likely to continue to the upside, and before we see a break of the previous swing low, which is this one here, at the 100% FIB starting point. So if we find around the 38.2% a strong price action reversal, maybe will be the beginning of the resumption of this new trend leg and this uptrend to likely continue. Maybe, but not maybe, but in Forex market, we experienced more usual retracements around the 50 and the 61.8%. So if there is a cluster like here with the 38.2% and a trend line, an uptrend line, and a dynamic moving average, these are three supported parameters that they can indicate the price to likely continue. I will be wait for a price action setup though, before I take any trades from this 38.2. If the price, now, as many traders we do, we place limit orders in the market. If I want to place a buy limit order in Forex market, I don't put it neither on 38.2 nor on 50%. I go only on 61.8% if I do a buy limit order. And I hide my stop loss below the 78.6% fib retracement. Why I do that? Because if I get filled on a buy order here, a stop loss below there, the reward to risk and a profit target up here, the reward to risk, it's 3.3 or 3.5%. I don't remember for sure. So I can afford to lose 70 trades and be profitable because I play with the laws of probabilities. Now, a trader that tries to take limit orders in the Forex market from this 38.2 and from the 50%, they get filled more often in trades, but because we experience deep retracements in the Forex market, it's likely to go all the way to 61.8. I prefer to miss trades where they bounced off the 38.2 and the 50%, but I have very high probabilities every time the market is going to get filled on the 61.8 by using limit order to be most likely profitable. Now, you have to also understand when you trade trends, always, if you are consistent, always, no matter what, the last trade will be a losing trade, always. Because when a trade breaks, when a trend trade breaks, an uptrend breaks to the downside, what happens is that it takes our limit order, it goes beyond our stop loss, and it's changing its direction. And from an uptrend, it's either going into the consolidation phase or it's going into a downtrend straight forward. So always the last trade of the trend, it's going to be a losing trade. Guys, I'm telling you I'm not telling you what you want to hear or what it's going to make you feel comfortable or uncomfortable. I'm telling you how the trading business really works. And as retail traders, what is our plus, what is our minus, what is our advantages, which our advantages are huge, okay? And what are the disadvantages as well? So we have to know upside down the setup we are trading. All right, that was a good example. I'm still bullish on this one because I don't have a signs on the time frame I trade that there is an opposite trend or the uptrend has been broken. So I will be looking for more buys. Let's check the comments. Ruben Dario said, good morning, Theo. Good morning, Ruben. Rumen said, hello, guys. Hello, my friend. Margaret said, good morning. Good morning, Margaret. Cherry said, good morning to everyone. Good morning, my friend Cherry. Mr. Carlos, always nice to see you here. Good morning from Mr. Carlos. Good morning to you. Swing Trading said, good morning. And a question, Theo, what are you drinking while trading? Ah, that's a secret. That calls Freddo Espresso. Greek Cypriots, we need our coffees no matter what. And trust me, it's a very nice coffee. No. So, Sorin said, good morning. Good morning, Sorin. Guys, are you okay with this type of trading setups? Any questions? Let's move on. Euro US dollar. This is the daily chart. I remember yesterday, I don't know, my friend, if you are on the webinar, but you asked me yesterday, can we look for shorts? Yesterday, it was this candle here, yeah, this one here. And you asked me, can we look for, sorry, yesterday was the development of this candle here. And by the time we had the live session, I think we were trading somewhere at the previous day's high. And you asked me, should we look for shorts? And my answer was, as we have a new high in the market, as the price makes higher high and higher low, I will be only looking for long in the time frame I trade, the 12-hour time frame. So higher highs, higher lows, I look for longs. Now, because the market, let's go back to on the daily chart, because the market stopped and reversed here. Here is what traders always they get misleading by their own thinking. If I start selling this market because of ABC reason I created in my head at that particular moment, I would have been profitable. And guys, that's not how it works. Remember, trading, it's all about probabilities. And this is the nature of this business. And unfortunately, they don't teach you when you start trading that trading, you need to learn how to think in probabilities. Or possibly, they start teaching you how to trade. How can you trade and then going into the deep waters and you don't know what's really happening? How many times did you find yourself watching a video, understand someone is doing an analysis or it's explaining something, you understand it, you go yourself on the chart and you are, oh my God, what am I doing now? How many times does happen? I believe every single person here experienced this this kind of went through this, let's say, correct, simply because the first thing you need to know is this business works with probabilities. The same trade today on the same currency pair will maybe win. Tomorrow, the same trade on the same currency pair, the same time, under the same market conditions, maybe lose. So we have to be comfortable with the nature of business as retail traders. And when you start understanding what I'm saying and accepting it, then you're going to experience a whole way of a different trading mindset. Your mindset will change, your attitude will change, everything will change, and you will feel very calm when you're trading. So at some point, the market stopped and reversed. Based on my analysis here, I see this as the strong resistance where I will be willing to stop buying this market. The price stopped and reversed. It's none of my concern, and I don't need to go and explain why it stopped and reversed. Market moves in a wavy pattern, higher highs and higher lows. At some point, the high, it's going to retrace and it's going to create a counter trend leg. I will be willing for the price to stop somewhere here and find some opportunities. If this not happen and the price is going to continue dropping, I will be willing to see if this level here, it's going to hold. If not, then most likely we're going to have a lower high here and a lower low, and we're going to have a beginning of a downtrend. So I will start selling. I use the same methodology all the time. We cannot react every time the market moves in one direction. Okay. Janice reply, that is so true, Theo. Exactly. Thank you so much, Janice. for understanding this. Let's move on. Australian dollar, US dollar. Yeah, we want to move on, but our MT5. Okay, now it's better. Australian dollar, very weak. We said that the beginning of a break of an uptrend line is the signal that the trend might be comes to an end. Now we have a lower high and a lower low, so we are comfortable to start looking for shorts. Simple as that. Now, we do have a support up here. That's the most recent support we can see in this market. And a daily trader or a 12-hour trader like myself cannot get involved in this market. Why we cannot get involved? Because the move, it's very steep. We don't have any retracement to be able to participate, and most likely this momentum is going to continue. Now, if this momentum not continue, and tomorrow and after tomorrow we're going to see some candles moving upwards like this, we can find some resistance, rejection of the price action, and sell it. But if it's going to continue moving lower, we cannot do anything. And here it's another thing for you traders. It doesn't mean because you correctly spot and identify the trend on the time frame you trade, you're going to also have the entry. It doesn't mean that, and you must be okay with that. Guys, that's the reality, and I'm trying to flip you into a skillful trader. Okay, I'm not allowed to use the word professional trader because of some restrictions and regulations, but trust me, if you accept and if you apply what I teach you here, you're going to end up a very skillful trader, and you're going to experience the trading result you want to experience. Okay, other people to tell you the half of what I'm telling you, because maybe they don't know all this stuff, because they didn't go through all this market experience and fall down 1 million times like I went through until I make it. They charge 5, 10, 20, 30,000 of dollars for coaching and teaching, which I just give you the information. Why I do that? Because I know that the only way to, it's not about giving you the information at the end of the day, okay? It's about accept the information and implement the information. That's all. So let's check the comments. Ruben asked, can you use Elliott to see if it can be the last trade? You can use Elliott, but to determine if it's going to be the last trade, you cannot say that for sure, because on the Elliott wave, if you go for this cycle, like in the Elliott wave, it's not just the wave 1 counter to wave 3, which usually is the largest, and then wave 4. And you have to understand that if you have a simple retracement on wave 1, you're going to have a complex retracement on the corrective wave 1. You're going to have a complex on the corrective wave 2. But also there are the extensions waves, and the extensions waves, they come in the wave 1, in the wave 3, in the wave 5, and I cannot determine the end of a trend. Unfortunately, I can only suspect it when I see a trend line, an uptrend line break to the downside, and some divergences. That's all. Sorin said, good morning, Sorin. Tumelo said, now I understand the concept of retracement. Awesome. Mogiol said, hello, Theo. missed most of the webinar, will watch recording. 8 like today. Oh, Mogil, you are sending likes. Thank you so much, my friend. Mr. Carlos said, this is called trader psychology, much more important than knowing a setup. Absolutely correct. Equal important as well. Now, if someone trades on the 5-minute chart, let's go to the 5-minute chart on this US Australian dollar, US dollar. You can see this kind of fluctuation here, and a breakout of this can really create a nice trend continuation because we have this steep downtrend. But again, if you are trading on the daily chart and you never looked at the 5-minute chart, why should you go today to trade the 5-minute chart? All right, guys. I challenge you to decide a time frame that you feel comfortable with. Trade at least 20 or 30 trades and then compare the results. If you want, you can send me an email and I can have a look of what you do in general. Okay. Next one, Kiwi US dollar. Really nothing here. If we have a break below, then we're going to have a lower high and a lower low. For now, anything can happen. The reality of the market is that we see an uptrend here with higher highs. That was the low, higher low. The market didn't make a higher high, but also didn't make a lower low. So we don't know if this is going to be a low or it's going to stop and reverse to the upside. I don't see this as a double bottom because it's only 3 days touched, and I need at least 3 days. It means 6 candles here. I need at least 12 to 13 to 15 candles apart from each other to determine a double bottom or a double top. The next, so here it's a nice one. Higher highs. Market make higher high. Indicator, bearish divergence or negative divergence. Bearish engulfing, other resistance, long-term resistance. A counter trend trader, what is doing is simply selling this bearish engulfing. Nothing wrong with that. But the next candle appeared to be a bullish engulfing. It means that the sellers are not there. See the market character. Before, the market came at resistance with this, what's the candlestick name? Dark cloud cover, this one. The next candle confirmed that the market is for sale. Same here. Spinning top, not at resistance. The next candle confirmed that sellers are here. This one here, bearish engulfing. Next candle, bullish engulfing. If you were in this trade, you should understand that, hey, the market is going nowhere. But anyhow, your stop loss already gotten out of the market simply because the next candle traded up there. So, resistance and support levels are always meant to break for trends to continue. This area, this resistance, broken with massive momentum, with massive volume, as we can see from the candle length. Today, we have a new higher high. Everything looks bullish. USD JPY. USD Canadian dollar, downtrend, but the USD, as we experience from all the other majors, is on the run. Therefore, we are looking for some deep retracements. Next one, Euro. Euro JPY, Pound JPY, all of them higher highs, higher lows, crystal clear. A few minutes before the London Open. Let's check the DAX daily chart. Yesterday, we got rejected at this point here. The market, though, since the open this morning, didn't make even a single tick of a high. I'm going to move the support below to the most recent support, and it's this one here. Resistance, it's still valid for this high, previous candle high. Let's go to the 4-hour charts to check if we missed any resistance or support. This is still relevant, but I would like for the scalping to take the previous candle's high, and it's this one here. So I don't care what's going on this, on the left, guys. There is a support here, there is support here, because it's already been penetrated, broken, up and down. You can see, so I don't take them as valid. If I trade on a 5-minute chart, why on earth I need to go back 3-4 weeks, 1 month to check the support and resistance? I need the most recent support, the most recent resistance. Okay. 5-minute chart, there is a very nice buy stop opportunity here. I like this, and a nice sell stop opportunity there. So I'm going for a sell stop there. And how many pips here? Let's go to the 1-minute chart to check. So I'm for a sell stop and a buy stop above here. Let's see in the next couple of minutes which one will be triggered. Yes, we are checking the DAX. Miguel said, I think the market is stalling because we are approaching the end of the quarter. For example, USD JPY is at the quarterly R2. Absolutely, why not? So 1 minute before the market open, before the London open, guys, if you find some value on the video, you can give some more likes. Come on, so many people on the video watching now, and we have only 11 likes. I'm sure we can do better. Yeah, I will give 1 like as well at the end. So let's see what the market will decide to do. Okay, we got triggered there. Where is the mouse? I will cancel the buy stop. And I hope for 10 pips. It's somewhere here. So, it tapped in. Guys, I'm out of the trade. Close. Come on, I should be faster today. So I closed the trade on the 9 pips. I could take about 14, but I wasn't that fast. Come on. To be honest, I changed a screen today and I put the screen a little bit far away from me. So, yeah. So, guys, another good trade, I think, on the DAX early this morning. We got triggered on the short side. Otherwise, that was more appropriate for the market. If we see the higher time frame, a retracement, and then a sell, that was a quite simple trade, let's say. So I don't see any other questions. I think I will wrap up. Ruben said, another win. Thanks, Theo. Cherry said, I closed it too. Mr. Carlos said, got 11 pips. Well done. Now, well done to everyone, guys. Again, I hope you find not just value out of this webinar, but really to accept the information I teach you here. Okay. I start teaching traders about the Forex market after I went through, trust me, I went through a hell in my journey. It wasn't the easiest, the smoothest, nothing at all, nothing even compared to that. I paid tens of thousands of dollars at the beginning when I first started in Australia. And trust me, it's not how much money you're going to pay. It's not who sell the most expensive course. Is really who went through everything to come up on the game and be consistent at the end of the day. So I hope really you learn, you apply, and the fact that you participate on this webinar, it shows us here at Admirals that we are doing a great job so far. We're going to improve as much as possible. And of course, I'm trying to improve as much as possible these webinars. I'm not a YouTuber guy, so that's why I don't play around with YouTube. I'm just a pure trader and a coach and an educator. So I hope you appreciate that. I would like to wish to everyone to have a great weekend ahead. Get some rest, enjoy with your friends, with your family, with your pets. And I look forward to see you on Monday at the same time. Thank you so much. Bye, guys.